Good morning, everyone. I hope you guys had an amazing weekend. In my last video, I was saying that there would be some more downside, but currently this is not the move that I would have liked to see. I would have wanted to see a bit more aggressive drop to the downside, but I mean, it doesn't always work out perfectly. So in today's video, we're going to talk about the SPY, the NASDAQ, the IWM. We're going to talk about the very, very important 30-year bond, as well as the largest tech stocks to gauge how much more downside there could be. And then, of course, we're going to talk about crude oil. We're going to talk about Bitcoin and Ethereum. And then I'm going to go over all of the stocks you guys wanted me to do technical analysis on. So without further ado, let's start off this Sunday amazingly. All right, let's get started. And of course, I am so grateful and thank you guys so much for all of your likes, comments, subscribes. We're at 2130 subscribers now. So yeah, man, thank you so much for that. All right, first, let's go ahead and take a look at the IWM and get this out of the way. All right, number one, this does not look bullish. So clearly, this is a bear flag formation. And today, we came back and retested yesterday's lows. And we have closed basically at the lows from January 6th. So clearly, this is not bullish. We came back, tested this trend line here perfectly. And now it looks like we're coming back and retesting this trend line. So number one, obviously, this doesn't look bullish. But the one good thing about the IWM's chart now is that the RSI is now starting to a bit sharply start to fall down. So that is a good sign. That's literally the only good thing that I can see on this chart currently. As we continue falling. So now what I think is going to essentially end up happening on the IWM is we're going to come back and retest this very, very important 212.20 to 212.50 area, potentially, on the IWM. And if that is to end up happening, right, we come back down to this area here. What that'll essentially do now, because now the RSI is starting to show the weakness that we wanted to see, right? If we fall down here, if the IWM falls down to here, the RSI will hopefully begin to sharply fall down as well, which will signal a more potential good buying opportunity, because now the RSI is also showing the same weakness that the MACD is showing. So the RSI would fall sharply, and then the MACD would fall even more sharply than this prior support, essentially, that I had on the MACD. So we'll probably end up being way more oversold on the MACD than we were back in early December. So that would potentially be a very, very good signal. So essentially, I mean, as long as the indicators are moving in a bearish way in conjunction with the price, that's a good sign. And now that's starting to happen with the RSI as well. So that's literally the only bullish thing that's going on right now. But I do think we do fall lower on the IWM. Of course, I could be wrong, but then the levels that need to break are the same levels that we've been monitoring for months now. This 218.11 and then, of course, the 220 level are the most important short-term resistance levels for the IWM. If we can start breaking above, and then this is a very, very important level of resistance here. These two highs, essentially at 220.50. If we can close above 220.50, then we can come back and very, very easily start to retest 222.40, 225, and then, you know, again, this important resistance level that we failed at, which basically signaled to me that we were going to start failing, and that was another reason why I wanted to go short initially, right? The 226.61 level. So it's going to be very, very interesting this week to see how the market responds to everything that's going on. But these are the levels on the IWM. And in general, I do think that we fall a bit lower. That would be the best bullish case scenario, in my opinion, because then it would give a better opportunity to go long in terms of the indicators. All right. So there's the analysis on the IWM. Let's go ahead and take a look at the SPY and crude oil. So here's the SPY. So we saw the IWM starting to sharply, not sharply, but a bit more weakness, starting to show a bit more weakness in the RSI. But you can see the SPY, this RSI is still very, very flat. So that's not a good sign. You can see that we made a newer low today, yet the RSI is still barely even moving down, yet the MACD is showing huge weakness. So what this is basically telling me is that the SPY can still fall below this 465 level and then come back and retest this 462.16 level potentially, right? We made a new low on Friday compared to Thursday, and that is usually not the best sign. The only other time recently that this has happened was this basically signaled the bottom, and this was back here. We ended up wicking down below prior levels of support here on December 1st and 2nd, and we wicked down below intraday, and that signaled the bottom. We ended up closing above, and then that was the bottom right here. This was basically you know, the market makers going after people's stop losses. Now, this instance might be different because back here we tested it twice. We had 2 tests of this level of support. But now this week, all we had was a skinny little candle here, and we didn't have a clear, you know, bottom forming like we did here. We had 2 days that we tested and then broke down below, but here we didn't have that strong of a support being made. So that's another reason why I think that we fall below this 465.56 level and then come back down to this level here, right? So if the SPY were to also come back down here, that would potentially give more space for the RSI to start looking more bearish. That would essentially make the IWM also fall down a bit lower, which would all essentially lead to a much better buying opportunity. And then the MACD would end up being much more oversold than it was back in December as well. You can see that the MACD currently is a bit higher. This blue line currently, right? It's a bit higher than it was back in December. If we fall down lower, then the MACD line will be lower, and it would essentially be a much better buy opportunity because we're very overextended to the downside. Does that make sense? So currently this does not look bullish at all. There's no reason to truly be bullish unless we can close above 465.56 tomorrow. If we can close above 465.56 tomorrow, Monday, right? This would essentially be an intermediary bottom in the market right here above this level. And then it's really not even a good bottom because there's so much momentum moving to the downside here that what we would want to see is we want to see the RSI move in conjunction with the weakness in the market. That is the main thing that I'm really looking at right now. That's not the case. This is not what's happening right now. So that still means to me that there is still huge downside potential because of the momentum overall is still very bearish. And you can see that from here. We had a very, very huge few red days, yet the RSI is basically just stagnant, and that is terrifying. Okay, because if the RSI is stagnant after these huge moves, we can fall down another, you know, $15 here, and then maybe the RSI would start showing weakness, right? But that's just terrible worst case scenarios. But yeah, we want to start seeing the RSI show weakness, similar to what happened in the IWM that we were just watching, right? And one of the other reasons why the SPY has not been falling as much as the NASDAQ or the IWM is crude oil. So crude oil has helped keep the SPY up. So this entire time while the market was really falling, crude oil was very green. I was showing you guys you know, OPEC meetings that were happening last week, and essentially crude oil is still very, very bullish right now. So if crude oil can hold above the $77 level, you can see it's clearly holding above support, or, you know, here at like $78. So overall, you know, this whole area here, we overtook it, and now we're trading above. Okay, so that is pretty bullish. So now essentially we need to hold above 78.5 and $78, and crude oil will continue to remain bullish. And if crude oil can continue to remain bullish, that would basically nullify this weird bearish price action, because that's currently what's going on. If crude oil was bearish, the SPY would have collapsed much faster and much lower. So crude oil is literally one of the only reasons why the SPY is still being held up currently. And overall, I'm still bearish on the SPY as well, unless this wick is the same as December. But currently, I don't think that's the case, because the RSI is still showing weakness. So overall, I think I'm still very bearish on the SPY as well as the IWM. Crude oil still looks good though, so it's not a great reason to be super bearish on the SPY. But what it is good to be bearish on is the NASDAQ. All right, so I'm gonna go ahead and show you guys the 30-year bond now. All right, so we started monitoring the 30-year bond again, because the 30-year bond showing weakness basically means that there is weakness in the NASDAQ. It means that the longer term stocks in the stock market, investors are not comfortable holding them. So the longer term stocks that do really well are basically the tech sector, because the tech sector has lots of long-term growth potential. So essentially, if the 30-year bond is falling, then a lot of the stocks that are going to be doing well longer term show weakness. So 30-year bond going down means the NASDAQ or the QQQ also goes down, okay? So we started monitoring the 30-year bond again because we started breaking below really important levels of support. Basically, this 158.22 level we broke down below. And now on Friday, we broke down below this 155.14 level. That is not good at all. So now these next two levels of support are going to be down here at 153.29 and then 153.07. If we come back down below, and essentially what needs to end up happening. So, all right. So number one, first of all, thankfully now we're oversold on the RSI. So that's a good sign. But now number two, if you can look at this MACD, why is this MACD now starting to flatten out? Why would the MACD start to flatten out if the 30-year bond is in free fall? That is not good. What we want to see on the 30-year bond MACD in general, we would want to see this blue line continuing to sharply fall, because that would essentially be in conjunction with the price movement of the stock. That's currently not what's going on with the MACD. So that is very scary. It means that regardless of this huge movement in the price of, the security, the MACD is starting to show bullish momentum. That's not good. We just broke down multiple levels of support. This is not a bullish scenario. There's no reason for the MACD to start flattening out here. So that is not a good sign. If we continue falling down here to this 153 level, then I'm going to show you guys what I think will end up happening on the NASDAQ. But this is not bullish. All right. And in general, right? So now, say for example on Monday, So now, say for example on Monday, the 30-year bond begins to start, becoming green, right? It's not necessarily that because the 30-year bond shows green for the first day, that the NASDAQ will also show green. Usually what's been happening in the past is when the 30-year bond begins to start turning and become bullish, the NASDAQ lags behind by 1 day. So even if the 30-year bond begins to be bullish, the NASDAQ can still have a red day and then begin to turn over the next day afterward. So that's something else that we have to watch. But right now, we just broke down below very important level of support on the 30-year bond. This is not bullish at all in terms of, price structure as well as the indicators. The only good thing right now is that we're very oversold on the RSI. Aside from that, there's no other reason to be very bullish, because we just technically closed below a very important level of support. And this is not good for the NASDAQ. All right, so there's that for the 30-year bond. Now I want to take a look at the largest stocks, essentially, that are very overextended in the NASDAQ. All right, let's take a look at Google. So Google trading outside of the lower level of the B band for the third day in the row. All right, and for the third day in a row, yet the RSI is still not oversold. So again, like, I just want to stress how bearish that is. It basically means that regardless of a huge vomit to the downside, the RSI still could not break down below oversold. It's flat. So that's not a good sign. It means that there's still potential more room to the downside. Google can come back and retest 2700 potentially. But again, you know, this lower wick could mark the bottom. I could be completely wrong. This lower wick here could be the bottom of, you know, it could just be people getting their stop losses, you know, filled. But the fact that the RSI has not become oversold yet is not a good sign. It is good. It is a good sign, though, that the MACD is much more oversold than it was in early December. So there's that. And usually when we are this overextended to the downside on the Bollinger Bands, it's very, very rare that we, you know, continue to fall for more than a few days in a row. But clearly, you know, we can still end up having a red day on Monday. But now we're starting to get to the last few days potentially of this downward move, according to Google, right? In my opinion, because usually we would have 1, 2, 3, maybe 4 days max in a row until we have a green day. So usually now is a good opportunity for the market to bounce. And then from the bounce, it would be like a dead cat bounce. We would potentially come back, bounce to 2804. Sorry, oops. It's 2804 level. And then from here, we would make another decision. Are we going to be bullish or bearish? And then, you know, we could end up falling even lower. That would cause the RSI to become oversold. In my opinion, that would be the best case bullish scenario longer term. Because then, you know, once we get here, and if we break down below these lows here, everybody is going to be bearish. And it would be the best opportunity to go long, because it would rip a lot of bears' faces, because they would end up being short at the lowest point of the market, and then, you know, continue making new highs. But yeah, man, currently we're very, very overextended to the downside on Google. We could bounce here only because this wick could just be a stop hunt. But the RSI not being oversold is a very, very bearish sign. Let's go ahead and take a look at Microsoft. Microsoft is starting to show some sort of a bottom. Okay, you can see that it did wick down below, but it's starting to show some sort of a bottom. The RSI is still flat, but it doesn't look as bad because we didn't make a new huge low. All right, so technically it's not as terrible on Microsoft currently, because we are at basically the same price. The RSI is flat and the MACD is very, very oversold. So now if Microsoft can start showing some life and break above this 318 level, then that would signal a short-term bottom, in my opinion, and that would basically help Google lift up as well. That would help Amazon and the NASDAQ, everyone lift up as well. So Microsoft showing this bottom here is very, very bullish, in my opinion. So I mean, the 30-year bond was showing huge weakness, but Microsoft did not, you know, really show that much weakness. So that's a very good sign. What I want to show now is Amazon. So Amazon, again, this is not a bullish sign, right? But we held yesterday's support on Amazon and on Microsoft. So, you know, again, the RSI not really crossing, you know, and falling lower is not a good sign. But again, you know, we fell outside of the lower level of the B bands and closed outside of the lower level of the B bands 3 times, 3 days in a row. So it's very unlikely that it usually happens a 4th time. But that's why I think we might end up bouncing on Monday. And then from Monday, that is going to be, you know, a very important time. Are we going to start, you know, either Monday we're going to fall even lower and then bounce, or Monday we're going to bounce and, you know, retest levels of resistance. And then from there, it would be very important to see which way the market goes. But in general, I don't think that the market continues to fall. But of course, I could be completely wrong. It all really depends on the 30-year bond. But let's go ahead and take a look at the NASDAQ. So the NASDAQ clearly made new lows. We closed at new lows on the NASDAQ. I circled this line here, I think on Thursday or Wednesday. I'm not sure when I circled here. But this is basically 377.47. And I said that that would be the next downward target. That would be essentially where I want to start looking for much heavier longs. But even now, I'm not sure if that would be the best idea. It would probably be like 375 to 376. One other good thing now is that the NASDAQ is starting to show more weakness on the RSI compared to what the SPY was doing. So it was similar to the IWM. It looks bearish, but now the RSI is starting to show weakness as well. So that is very, very good. But the other thing is that the Bollinger Band is sharply falling. So even if the price of the NASDAQ begins to sharply fall, the Bollinger Band is sharply falling as well. So it'll take a lot of weakness. It'll take a lot of weakness for the NASDAQ to become oversold on the Bollinger Bands. So ideally now, what I want to see is on Monday, I want to see the 30-year bond have one last huge red day. I want to see the NASDAQ have one last huge red day down to like 374, 375. And then the RSI, I want to start seeing some huge weakness in the RSI. That would cause the MACD to just be very, very oversold. And that would be a much better, safer buying opportunity to go heavier into longs and get that dead cat bounce potentially in the NASDAQ. And then even if it's not a dead cat bounce, that could be the bottom of the market for this new low here. And then we would just bounce heavy again. But right now, you know, the 30-year bond is showing tons of weakness. The NASDAQ closing below Thursday's low is not a good sign either. In general, I do think that we will end up falling a bit lower. At that point, I want to buy the dip even more. I didn't buy heavy at all on Friday. Because I think that the market falls lower. And ideally, that's what I want to happen. So right now, we're in a very weird range here. So right now, you're either waiting for huge weakness in the NASDAQ, or you're waiting for it to close above important levels of resistance. So in this area here that we're currently in, there's no point of taking a long or a short, because you want to start waiting to see a break either to the upper or lower side. Right now, we're in a range. So you want to wait for confirmation. You don't want to force any trades. So overall, I think that the NASDAQ is going to continue falling. This is not a bullish sign, but of course I could be wrong. This wick can just be a stop hunt. And yeah, I mean, ideally what I want to see is the NASDAQ to vomit even lower. I want to see the 30-year bond. I want to see the 30-year bond vomit even lower. That would cause the SPY RSI to start showing some weakness then again as well. And the IWM, it would cause the IWM to fall down and retest these levels. Overall, I just want to see some more downside so I could buy the dips. And currently, it looks like that's going to be the case due to the weakness in the 30-year bond as well as the RSIs across the board. So, yeah. But we could essentially just have one more red day, according to, the other top tech companies. But the fact that Microsoft and, the fact that Microsoft started to hold support, and the fact that Google began to basically is very, very overextended now, it tells me that we could be coming towards an end of this downtrend currently. So, yeah, there's my analysis for the overall market. Next, let's go ahead and take a look at crypto. All right, Bitcoin, I'm going to keep this very short and sweet. So right now, obviously, we're holding this 40,000 level, right? 40,000 is a very, very important level to hold. If that level breaks, then we're coming back down to this 39,600 level. Very, obvious, whatever. You could go long here. The RSI is oversold. That's cool. And it's flat because the price is also flat. So that's bullish. It means that the price of the, the security is going in conjunction with the RSI. That's always a good sign. But now the MACD slowly starting to creep up is not a good sign. So what I think ends up happening is we could potentially come back, retest 44,000, and then fall down even lower and break 40,000 potentially. So just be careful about that. Do not start becoming super bullish on Bitcoin. Let me go ahead and take a look at Ethereum. Ethereum, it's good because we're holding this 3,000 level as support. That's a very important level of support. The MACD is falling, which is a good sign. The RSI is starting to flatten out. That's fine. But again, just be wary of a bounce to 3,300 and then a lower drop. That's what I think might end up happening in the entire crypto market right now. But you could, go long and take, if you want to trade, you can hold. And, as long as 3,000 doesn't break, you can basically go long against this level on Ethereum. And you could go long against 40,000 essentially on Bitcoin and hope for a bounce to the upside. So there's my analysis on the crypto market. Now let's go ahead and take a look at all the stocks you guys wanted me to do technical analysis on. All right, Apple, number one. So clearly, number one, we need to hold above 171. All right, this down wick can basically be the same wick that I was basically showing in the other indices, right? Could be a stop hunt. But 171 is a very important level of support. I do personally think that breaks. And then the next very important level of support is going to be this 168 level. So 168 is going to be the next important downward target for Apple. And that would help signify the level of support. The level of resistance is obviously going to be this prior wick here to the top at 175.30. So essentially that's basically the two important levels of support and resistance. We can see that Apple is flattening out on the RSI while the MACD is falling lower. That's not the most bullish sign because I think that Apple should start showing weakness in the RSI first before it starts bouncing. So I would hope that it falls down to 170, 168 first and then goes higher. So yeah, there's my analysis on Apple. I am overall more bearish first. Texas Instruments. So I don't know why it fell this much, but currently the next very important level of support on Texas Instruments is going to be this 177 area. So 177 essentially needs to really hold. From there, because currently right now you can see we're very overextended outside of the lower level of the B band. So number one, that is a good sign. It could potentially mean that we're signaling a bounce soon. So if we have another huge red day down to 177, basically that can signify a potential buying opportunity for a bounce. You can see what it does usually when we are outside of the lower level of the B band here. We usually do bounce. So now one more huge red day would be a better buying opportunity in my opinion. And then potentially, we have this gap to fill down up here at 185.79. So from 177, your next upward target would be 186, 185 essentially on Texas Instruments. So XRP, clearly it's still trading below this downtrend line. Very similar to what's happening with Ethereum. We had a downtrend and we are still failing to close above this downtrend. So essentially, in the short term, we did hold above 70 cents as support. So we're basically at, 75 cents now. But the MACD is curling upwards. The RSI is now starting to curl upwards. So now essentially what's going to end up happening now is if the rest of the market starts to bounce, like I think it will, right? What'll end up happening is we'll bounce up above this trend line, come back and retest the trend line. And then once I think Bitcoin does retest 44, 43, and then from there, XRP will be retesting this trend line. And then if Bitcoin breaks then I think XRP breaks down lower as well. This trend line for Monday is essentially 77.5. If 77.5 can basically, if we can close above 77.5, then it's essentially we've closed above this trend line, and that would signify one huge day of bullishness, in my opinion, I think, on XRP moving forward. So if on Monday we close above 77.5, then into Tuesday, I think that we go and retest potentially above 80 cents, even to 82 cents on XRP. All right, so SHIB, you can see that we made a huge wick yesterday, right, on the 8th, essentially, right? So now moving forward, we need to see now, like, the main level that basically needs to break above is 3 cents. So if we can break above 3, right, that would basically help give enough steam to go and retest this 20 exponential moving average here at 3.3. If not, you know, then the level of support that needs to hold is 2.6. But yeah, right now it's basically we're just in the middle. We're waiting to see direction. You could go long above 3 cents and have a target for 3.3, but right now is not a huge good, you know, buying opportunity unless you want to go long at 2.8, have a stop loss a bit below 2.6. That would be a good risk reward trade. But yeah, I mean, essentially everything is basically going to end up going up. Like, it's just a matter of having money and everything on hand to just buy dips and afford to be able to hold longer term. SoFi, basically, this does not look bullish. We had a huge wick. I do think that we end up might retesting it down here at 13 cents once more. So I think we drift down a bit lower. But currently $13 is support for SoFi. The RSI is stagnant. You know, it just doesn't look super bullish. It looks like we do fall back down to 13 and then, you know, come back and retest higher upwards. But right now it's not really bullish. You could go long against 13 for like 15 and then $16 for upward targets. But I mean, I would wait for it to fall down lower, or I would wait for it to start closing above 14.5. If we can start closing above 14.5, that would be a much safer long opportunity, in my opinion. So GameStop, I was sleeping on GameStop, unfortunately, because I was, you know, I've been monitoring this downtrend line for a while, and basically whenever we do touch this downtrend line, it's a really good indication that we bounce. And what ended up happening was on the 6th, we touched the same downtrend line and we ended up opening, what, like 20-30% higher. So basically we're at a pretty decent point. So if, in my opinion, if GameStop falls back down to 120 to 126 area, anything like this area, buying like further out of the money calls, even for like 250 calls for like a month out, will, you know, potentially be really good. We did have a huge red day. We about faced and, you know, had a huge red day here, obviously, but anytime we come down and test this trend line, there's always a pop. And that is basically this blue trend line here. Every single time we basically touch it, basically signifies a nice reversal. So if we come back and we touch it again, that would be very nice. And that'd be great. But right now, you can see that we're basically in the middle. One level that we would need to close above to start looking bullish again is this 156.92 level. If we can close above 156.92 on GameStop, then potentially we can go back and retest this 200, maybe even 250. So keep your eyes on GameStop. All right, Qualcomm. This is exactly what we want to see in terms of the RSI. So you can see the RSI is sharply starting to fall. It's going in unison with the price action of the stock itself. So this is exactly what we want to see here. Now, if Qualcomm can come back and retest 176, 177, that would be a much safer and better buying opportunity. By that point, the RSI would have also fallen much lower, and the MACD would have also fallen much lower as well. So Qualcomm is looking the most bullish. You know, Qualcomm looks really bullish, and I really like the fact that the RSI is falling. So if we do fall back down lower, I think these are good buying opportunities in my opinion. Of course, the level that needs to really break for resistance is going to be the 20 exponential moving average, which is currently 183. So if we can close above 183.5 essentially on Qualcomm on Monday, that would be a good opportunity to also go long if we are bullish again for Qualcomm. Plan, this looks really, I mean, this is just kind of weird. So the MACD is oversold, right? The RSI is starting to sharply move upward, but we couldn't close above the 20 exponential moving average. So that's not a good sign. The clear level of resistance right now is this wick here, and basically it's $46. So if we can close above 46, that would be a much safer buy opportunity for Plan, in my opinion. And obviously the downward level of support is 42.5. So 42.5, if we break down below, go short, in my opinion. If it crosses above 46, we could go long. But right now, it's very, you know, choppy. There's no real direction currently. So I would wait for a break in either of those two levels. Raven coin was one of my favorite longer term coins that I would follow. Right now, 10.5 and 11.2 are very, very important levels of resistance. So if we can cross and close above 11.2, that would signal basically this bear flag is not as valid, right? So currently we're in a potential bear flag, right? If we can close above this level here, that would basically, and hold above this level, that would basically signify that, like, you know, this is a nice support level, and then we could go higher from here. But right now, currently, it's very important, obviously, to hold this low right here. And then if we fall down there, then 9 cents is going to be very important. So right now, I mean, it's just a matter of seeing what happens with Bitcoin. You know, 9.3 cents and then 9 cents are going to be two very important levels of support. But, you know, if you're already long and you're still holding, this is still good because we're making higher lows, you know, higher low, higher low, higher low. So as long as we can hold above 9 cents and not, you know, break this uptrend that's basically being formed, that's a good sign. But now we need to see if we can close above 11.2 essentially for Raven coin. So for URNM, this mining ETF, uranium mining ETF, the very important level of resistance is 77.83. So you can see that this area is just very, very choppy. But if we can close above 77.83, that would basically be a very good opportunity to start going long again. You can see that on Friday, we closed above the 20 exponential moving average. And when we do close above the 20 exponential moving average, what tends to happen is we do have another green day. So we could potentially go higher Monday and Tuesday. It's a good sign that the MACD is falling, but the price of uranium is going higher, right? And the RSI is also going higher. So overall, this is bullish. This is a much more bullish case than a lot of the stocks that we were looking at. So 77.83 needs to break, and then we can continue on going higher and possibly even break above $82. So yeah, URNM looks pretty decently bullish. Whereas PayPal, it's chopping around here. So you know, we need a clear direction of which way we're going to go. So the easiest way to see the direction will be if we can cross and close above 196.28. So if PayPal can close above 196.28, that would be a much, much safer long entry. Okay. Yes, we are making higher lows here as well on PayPal, which is another, you know, bullish sign, but we need a very clear cross above resistance before we get very much bullish, right? Because right now we keep on chopping around. If we close above the 20 exponential moving average, cool, we hold for a few days and then we end up falling, and then we close, and right, so it's just a lot of choppiness here. What we want to see is either a break below this low here at 181.67, right, to go short, or you want to go long above 196 28. So right now, you know, we're just in chop mode. So right now it's not really a good time to enter either long or short. Unless you want to go long for some longer term calls, that would be the only thing that I can see worth doing here. And then you would sell if we break down below essentially 179.73. But yeah, that's really all I can see that you would do at this point on PayPal if you want to buy longer term calls. But yeah, there's that for PayPal. It would be much safer to buy as you break above resistance though. CRM is basically holding and making some sort of a bottom here, basically. As long as it holds above 226, this could still be like a bullish sort of support. Basically, as long as 226 holds, we see the RSI is oversold. We see the MACD is extremely oversold. So this could potentially be a good buy opportunity. But if the rest of the market begins to fall, CRM can potentially, CRM can potentially fall lower as well. So just be careful. But 226 is a decent level of support currently. Then the next important level of support is going to be around 222.50. So be careful for CRM. So Netflix, multiple huge red days here. We're still trading outside of the lower level of the B band very clearly. We made new lows today as well. We made new lows on Friday as well. But the RSI is now literally the most oversold it's been since September 2019. The MACD is oversold as well. So essentially now, as long as this 533 level, 530 to 533 level can hold a support, Netflix can potentially come back and bounce and then eventually come back and retest this green trend line here, which would be around 570. So overall, Netflix is starting to basically, as if 530 holds, then that would potentially be the bottom. We are extremely overextended to the downside on the Bollinger Bands, and usually that doesn't last very long. Usually what happens is we do bounce back inside the Bollinger Bands. So right now you can see we're outside. You know, just be careful. As long as 530 holds, then potentially we can play a bounce to the upside on Netflix. So BlackRock, two major levels of support. Basically, we just held, not two major, but 3 days in a row. Basically, we right here, not in a row, but 1, 2, and 3 separate days we held this level of support pretty well. So essentially 884 is you know, this level of support on BlackRock, and we held that very, very well on Friday and on Thursday. So if we go back and retest 884 and then bounce back even higher, basically the next upward target is going to be this 20 exponential moving average either way to around 910 to 911. So as long as this 884 level holds, 910 is the next level of support, or next level of resistance on BlackRock. And of course, if the IWM and the rest of the market begins to bounce as well, BlackRock will definitely bounce higher also. So Disney is showing tons of strength in terms of the MACD. So the MACD has not even crossed above yet, really. But Disney is now, you know, it's beginning to cross and close above multiple levels of resistances. So you can see we're clearly in an uptrend. We're holding and making higher lows on Disney as well, right? A very important level of resistance now that needs to break is 160.32. If 160.32 can break to the upside, then we can go back and retest this 164 level. And then once we break above 164, our next target is going to be the gap that needs to fill at 174. So overall, this is very, very bullish on Disney. The only level of support that really needs to hold right now in the short term is this 153.68 level. So if 153.68 can hold, then we can continue going on higher. Right now, the MACD looks very, very strong. The RSI is also pretty strong, but just be careful, because usually when the MACD does look this strong, it's not always a good sign longer term. It could mean we could, you know, bounce higher and then fall even lower, but just be careful. But overall, this looks very, very bullish. So as long as, you know, this level of support holds, Disney should be good. So XLE is obviously doing very, very well. You can see that this is a bull flag, right? and currently we are breaking above this bull flag here. Crude oil is obviously doing very, very well, so XLE is doing well as well. The next upward targets basically are going to be these two levels, 62.44 and 63.65. Then that's when things can become, you know, a bit more scary, because right now we're skyrocketing right now. The RSI is very overbought, and the MACD is very overbought. So we could see a retracement, and the retracement would basically be back down to 59.5. So if 59.5 can hold as support, basically if we can, you know, fall back down 59.5, hold as support, then potentially we can make another leg up. But right now we are in a huge uptrend. And if you want, what you would end up doing is you can make a trend line here. And basically as XLE fails the uptrend, you can go short. So if tomorrow XLE is not super green, you know, basically if XLE is closing below 61.2 tomorrow or 61.3 tomorrow, you can go short XLE in the short term for 1 day, and that would basically most likely be bullish, because it would be the close, it would be the break of this uptrend. So overall it looks bullish though. So potentially retracements back down are going to be good dip buying opportunities, as long as crude oil is also bullish. So HUT does not look good, only because we made a new low today. Obviously, we are still not oversold on the RSI. The MACD is oversold, but we're still falling lower. So the next level of support is going to be around 617, and then obviously $6. But right now, you know, we're still making new lows on HUT. The level that you would basically go long for, and like if we can break above, is 703. So if 703 can break as resistance, that would be a much safer long opportunity. And then your target would be this 20 exponential moving average, which should be around 770, 780 on Monday. So just be careful about HUT falling lower in the short term. Link is one of the most bullish coins right now, obviously. So, you know, I mean, there's not really much else to say. As long as these levels of support hold, like $23 holds and then $25 holds, Link can continue going on higher, especially in the short term if Bitcoin looks bullish, because Bitcoin is now holding support. So if Link can keep on pushing forward, then the next real level of resistance on Link is going to be $31. And then from 31, then it'll be 34. So overall, Link looks very, very bullish. And in the short term, if Bitcoin even shows some sort of bullishness, Link will definitely break above $30 in the short term. So yeah, overall, Link is very, very bullish as well. So Ford in the short term has been very, very bullish as well. What you would want to see is a retest of either $23 before going long, right? Or, you know, some sort of consolidation here. Let the indicators, you know, cool down a bit, because we're overbought on the RSI, we're overbought on the MACD, and we're still trading outside of the upper level of the B band. So what we want to see is either some consolidation at these levels here, or a quick retracement back down to the 23 level and hold that level of support and then go on higher. But overall, Ford, all of these dips, any sort of dip right now does look like a good dip buying opportunity as well. You see that there's earnings for Ford at the end of the month, so we could see a earnings run up as well after a short term fall. So just be careful about that short term fall on Ford. Basically, it's really the same exact thing on AT&T. We have earnings at the end of the month here as well on the 26th. Had a huge run up recently, so now basically we did come back and retest this level of support. Essentially, as long as 25.5 can hold as support, AT&T still looks really bullish in the short term. So as long as 25.5 can hold, we can still go back and retest 27 and break above these highs here at 2682. But if we do fall, that would be good for the RSI. That would be good for the MACD. It would give some time for things to cool down. Overall, AT&T still looks very, very bullish as well. But what I want to see is a bit of a dip and then a good, dip buying opportunity prior to earnings. And then into earnings, like before earnings starts, I would want to see a run up in price. So that is something that I'm watching. So for C and Wells Fargo, obviously there's earnings on the 14th. So this is basically the run up prior to earnings. The IWM, basically one of the main reasons, again, also was for the SPY not falling was that the financial sector was doing pretty well. So C, currently you can see it's trading outside of the upper level of the B band. That is worrisome because usually what tends to happen is we return back inside the Bollinger Bands. So just be careful about that. Now is not really the safest time to go long. What we want to see first before going long here is a retest of any of these prior levels of support. So we would see a retest of either 64.8 or ideally 64 before going long again. Very important level of resistance is going to be this gap here at 67.23 on C. Wells Fargo obviously is, skyrocketing as well. And now is not a time to go long. Again, you would wait for a retest of prior levels of support. So this first level of support that would need to be retested would be 53.5. That would be a much safer opportunity because we can also see that we have earnings on the 14th. So yeah, you don't want to buy into all of this strength. You would rather buy on dips at 53 or 53.5. So be careful on stocks that are basically skyrocketing. All right, Lucid looks very bullish in the short term because it finally closed above 41. So we closed above 41. What can end up happening now is we can start really showing some strength. But as long as 41 holds, that is going to be the key level of support now. It was a very key level of resistance all throughout here, this $41 level. But now it needs to hold a support. So overall, this is very, very bullish on Lucid. This is a very bullish move. And now we're trading outside of the upper level of the B band. What could end up happening is a nice squeeze potentially to $44 or $45 on Lucid in the short term. PLTR looks very, very bearish to me. It made new lows. The short-term support is obviously going to be the $16 level here. The main level of resistance that we would need to wait for to go long, in my opinion, is this 17.81 level for PLTR. The RSI is still not oversold yet, even though we've been falling. So that's not a good sign either on PLTR. So I would wait for this level to break as resistance before going long. So Doge is holding support. That's fine, right? The short-term support is going to be this 14.5 level, right? Obviously, but you could go long here, and then the upper target is going to be this 20 exponential moving average at 17 cents. So it is technically a decent risk reward trade if you were to take it right now. But what would be a safer long opportunity would be a break above 16.21, which is this candle right here, 16.21 cents for Doge. But of course, we can still go back and retest this 13-cent level all the way back there. Tillery, this also really does not look very bullish. We made a new low on Friday. Short term, the level of support basically that really needs to hold is the low on Friday at 6.29, and then the next level of support would basically be $6. It's not a great sign that the RSI is flattening out in the oversold territory, even though we're making new lows. We became oversold multiple times as we continued falling on Tillery. So that's not the best sign for Tillery. But the good thing now is that we're oversold on the MACD as well. So that is a good sign. But yeah, man, as long as basically this low here at 6.29 and then at $6, those levels hold, those will be good levels of support. But of course, you can still go long as we break above $7. So you can either go long above 6.84 or you can wait for a break of $7 and then go long above that for Tillery. So, but overall, it does not look bullish. So Mark, you can see it's in a downtrend. I would wait for a break above $1.07 before going long. You know, this just doesn't look like a good buy opportunity currently. I would wait for resistance to break before going long, and basically that would also signify a break of the 20 exponential moving average that we have not been able to break, and it was acting as resistance since, you know, early December. So I would wait for $1.07 to break on Mark. So Target looks pretty bullish. The MACD is falling yet the price is rising. So that is a very good sign. The RSI is starting to move upwards as well. You know, it sharply moved upward and then it started becoming a bit flat, but it's a good sign overall because the momentum indicator is falling, yet the price is rising. So, and we closed 2 days above the 20 exponential moving average. So we could now potentially, if you haven't entered long yet, you could go long above 233.20, and then your upward target would be around 236 to 237. But overall, this is much more bullish than a lot of these other setups we were looking at. Target looks pretty good as long as this 20 exponential moving average holds as support. And on Monday, basically, this level of support is going to be around 228.60. So if 228.50, 228.60 can hold, it looks really, really good for Target. Airbnb held this 159 level on the fib perfectly here. So, but now it failed at the 20 exponential moving average perfectly as well. So that's not the best sign. But it is a good sign that we held this level of support. You know, we made a new wick. We never came back and tested it. And then we held this 159 fib level perfectly. So now what we want to see, as long as 159 holds, we could come back and retest that level. But really what we want to see is a break above this high on Friday, which is at 166.88. So we want to see 167 break above before we go long, or we can go long at this level of support. But overall, right now, it's not this price right here. It's not a price to go long at. We want to see confirmation to the upside first for Airbnb. Roblox does not look very bullish either. It's making new lows. It's continuing to fall lower. The RSI is not yet even oversold yet. Yet we're we had a very huge downward move recently. So it looks like we can come back and fill this gap down to $79 on Roblox. Basically 79 to $80 are a very, very important level of support for Roblox here. Yeah, man, if that breaks, then we're coming back and retesting 72 and 67.3. Shopify came back and retested a very important 1120 level. So yes, Friday's low was literally 1121, and 1120 is a very, very important level of support for Shopify. We need to see now if that level holds. If that level can't hold, then we're gonna end up falling back down to 1100 and continue falling. We can see 1, 2, 3, 4 days in a row that we closed outside of the lower level of the B band here on Shopify, and that is very, very weak. So what we could end up seeing is a short-term bounce back up to 1200, and then from there it'll be a very, very important signal. Then are we going to break above 1200? Are we going to break above 1230? That's basically going to be it on Shopify. We can see the RSI is now oversold, yet it's barely falling, which is not a good sign. We want to see a vomit in the RSI, similar to what's happening in the price action. But it's also bearish that the MACD is starting to flatten out here, even though Shopify is making new lows. So that is also not a good sign. So that signifies potentially we can see another red day on Shopify. But basically 1200 and 1230 are short-term levels of resistance. So if we can close above 1230, that would be a good signal that we can potentially come back and retest 1300 in the short term. Sushi looks pretty decent as long as 6.3 can hold as support. It looks like it's curling. It sort of found a bottom here. A lot of these other Some of the other altcoins are starting to bounce as well. And if Bitcoin does really well, obviously we're going to break above on Sushi. The upward target essentially is going to be this 20 exponential moving average. The MACD is starting to curl upwards as well. The RSI is showing a bit too much strength. That's my issue here. The RSI is showing lots of strength, but it's not really justified. We didn't really break above any levels of resistance. There's no real reason why the RSI should be sharply moving upward here. So that is sort of an issue. What this basically tells me is that we can potentially come back and retest 7.5 or 7.75 and then basically fail at that level and fall down lower. But in the short term, as long as 6.3 is holding as support, Sushi looks good. And currently, you know, this big green candle is technically a good indication. Also, the MACD moving upwards is fine as well, but overall, it really depends on what Bitcoin and Ethereum are going to do. Yeah, I'm not sure what this coin is. I'm not sure if I'm looking at the right chart. But this clearly, this doesn't look bullish either. I would rather become bullish above 1 point. I would basically wait for a break above the eighth, the high of the eighth, before going long. Basically above 2 cents. And then, you know, but this just doesn't look very bullish. I mean, it's just a penny. So you could throw some money in and just wait for a bounce longer term if Bitcoin and everything bounces as well. But right now, this is not, it's in free fall. So I would just wait for levels of resistance to break above, either at 2 cents or wait for a break above 2.25 cents. So VeChain held this important 7.47 cent level as support, and now, you know, we can see that it bounced off of this level. We wicked down below on the 8th to 7.21 cents. So as long as 7.21 cents holds the support, this can potentially come back and retest 8.8. So that is potentially possible. The MACD is oversold. The RSI is starting to slightly move upward in a sort of aggressive way. That's not the most bullish, but it is good that the MACD is still falling lower, yet the price is moving higher. So that divergence is bullish. So, yeah, overall, I think that VeChain can potentially bounce. So it's good in the short term as long as those levels of support hold. So BABA, this looks like a really decent dead cat bounce. So now what needs to basically end up happening is we're trading outside the upper level of the B band, right? But what might end up happening is we're going to come back and retest this trend line here. So basically on Monday, this level of support will basically be 126.5. If we can come back and retest 126.5 and hold that level, that would be very, very bullish for BABA. That would basically mean that we can potentially go on even higher to 140, and then to this key level of resistance here at 148.50. If 148.50 can break on BABA, then we can go and retest the gap at 161.14. So keep that in mind on BABA. We would want to see levels of support hold. So this 126.5 level, or this essentially this 123 area on BABA. Having a retest of either two of those levels and holding could potentially mean that we will continue going higher. So Baidu, same concept. We're breaking above, right, on the Bollinger Bands. The RSI is moving upward. The MACD is moving upward as well. They're overbought, right? What you want to see now is this just a dead cat bounce? But what we want to see is a retest of 150 or 149 to see if this is actually a good move, right? So what we want to see is a retest back down to these levels of support and then a bounce. That would confirm that this is actually a break of this bull flag, right? So I would wait for a break, right? Or I would wait for a break and hold above 154.28. If that level holds as support, then that could potentially mean that we'll go back and retest 160. So yeah, just be careful. So Neo, we're still trading within this range here as well. 28 level needs to hold, and it looks like, you know, it's still holding as support. Overall, the MACD is oversold. The RSI is moving stagnantly, even though we're making new lows. It's not a good sign. We would want to see a retest of 28 before going long again, or we would want to wait for a break above 33.28 before going long on NEO. So Beyond failed at 72.5 clearly as resistance. It's not a good sign. We would want to wait for a break above 72.5 before going long. But we did close 2 days above the 20 exponential moving average. But again, you know, 72.5 is a very, very important level of resistance that needs to break on Beyond. The MACD is crossing up above. The RSI is moving up above as well. So this MACD signifies that there's a lot of strength still left in this move. But 72.5 is a very important level of resistance first that needs to break. XPEV does not look bullish at all. We closed below the 20 exponential moving average after holding a support the prior 2 days. So, you know, it looks like we can come back and retest this 43 level or 42.71. But overall, this does not really look very bullish for XPEV. We have made higher lows here, but if we break down below 42.7, that would be very bullish or bearish for XPEV. Overall, as long as 44 holds as support, that can still mean that we'll continue on higher, but this close below the 20 exponential moving average is very, very bearish. Tesla, this is a pretty decent close. We closed above this trend line here. Tomorrow, the level of support here for this trend line is basically going to be at 1,020. So if we can close above 1,020 tomorrow, that might signify that we will bounce off of this trend line. But if we close below that trend line, then that would potentially mean a good short opportunity for Tesla. Also, because on Friday we closed below the 20 exponential moving average, that's not the best sign. But of course, yeah, you know, this 1020 level is going to be very, very important for Monday. So Mara is starting to bottom out, similar to what Bitcoin is doing, basically. What we want to see now is if Bitcoin can start to skyrocket, and then, you know, the important levels of resistance are going to be for Mara 29.5 and then this 32.45 level. Nothing has really changed. We're basically forming a bottom here. The MACD is oversold now, but the RSI is still not oversold. So that is not a very, very good sign for Mara, right? But of course, if we can close above this 32.45 level with strength, and if Bitcoin is actually going to show a decent move, then we can go back and retest this 43 level. Roku is not bullish at all. You can see that it basically failed this downtrend line. And as soon as we broke down below that line, it's basically been a free fall. So 170 is the next key level of support. 170.44 is the next key level of support for Roku. If that breaks, then I'm not sure where the stock even goes. But basically, what we want to see is a bounce at or around this level. So maybe 172, 173, and then come back and retest this 190 area, which would be the downtrend line on Roku. But overall, it's not bullish yet. So DraftKings, you can see that we came back and retested this downtrend line, bounced off of it perfectly, and now we basically need to break above this 20 exponential moving average. So what we want to see is a break above $28 for us to become bullish again on DraftKings. And then, you know, if we break above 28, we can easily break to 30.7 and then even higher. So then we can start squeezing, to be honest, on DraftKings. So and if DraftKings starts to do really well, then a lot of these other beaten down stocks can take that as a signal that because DraftKings is starting to do well, a lot of these other stocks might start doing well also. The MACD is oversold. The RSI is starting to move upwards. So this MACD is basically showing that there's still more room to the upside. But we need to see a close above 28 ASAP. 2 closes above the 20 exponential moving average would signify a bullish move. So obviously in the short term, Intel has been more bullish than Nvidia and AMD recently. The levels of support are basically going to be 53. And then this very important level right here at 52.32. So as long as those levels of support can still hold, even if we come back and retrace down here, that can potentially mean a good opportunity for the RSI to cool down from being overbought here, basically, and the MACD can start to fall down as well potentially and then become oversold. So that would be the best case scenario longer term. And then if that does fall and we fall down to the 52, 53 area, we could have a run up into earnings into the end of the month. And that would be the best case scenario. We could bounce off of these areas and then into prior to earnings, we can skyrocket back up to 54 to 55. So now NVIDIA, you can see that it's at a very important level of support right now at 271.18. So we came back and retested this level twice, right? As long as 271 can hold, NVIDIA can bounce. But if this level breaks, the next level of support is going to be this level here at 267.84. But yeah, this whole zone right now, this 267 to 271 area, would potentially be good buying opportunities. But of course, it really all depends on the NASDAQ as well as the 30-year bond. But if we get good buying opportunities here, the upside is very, very good for NVIDIA, especially since, Nancy Pelosi is invested into the stock heavy. And obviously, SOXS, which is the semiconductor bear, is doing well because NVIDIA, INTC, AMD are all doing bearish. So obviously this indicator, the semiconductor, this SOXS is doing bullish because these other stocks are doing bearish. So yeah, I mean, as long as INTC and NVIDIA don't start to bounce, then this will continue to skyrocket. As long as 362, which is this 20 exponential moving average, this 360 area holds as support, we can potentially keep going on higher to $4.12 potentially on SOXS. But it's all really dependent on these stocks as well as AMD. If you've watched to the end, I really, really appreciate you. I hope you guys enjoyed the video. I hope you guys enjoyed the content that I post. Thank you so much for all of your love and support, and I will see you guys tomorrow. Thank you.